Happy Friday, traders. It's 8 a.m. Chicago time on Friday, the 28th of July, 2023, the last Friday of July. Thanks for joining me for episode number 2512. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. How's the sound this morning? Just let me know. How are you doing? How has your week been? How was yesterday for you? Quite a bit of movement yesterday and some surprising extensions that we're gonna talk about here today. So let's take a look. We're gonna jump into our convergent trading pre-market summary sheet. We have a market that has bounced quite a bit from yesterday's very bearish close. Mild risk on this morning. The S&P is up 32 points, still inside of yesterday's range across the board. The Dow's up 170 points. The Nasdaq leading the pack up 176 points. Intel came out yesterday and really just blew the doors off of expectations there. Intel was expected to lose 3 cents per share, and it beat by a swing of 16 cents. It came out a positive 13 cents. That is a 533% beat. They also beat on revenue, and that was the first kind of clue that things may push up. The other one is Ford. Ford came out at 72 cents versus 55 cents, beating its earnings by 31%. Also beating its revenue, expected at 40 and some change billion dollars, came in at 42.427. So quite a breakout there on Ford. The big news though overnight, and potentially what this rally is being not blamed on, but being attributed to, is the Bank of Japan has said that it is allowing its 10-year JGB to be conducted at 1%, and it may further support it by allowing it to float, and that it'll also it emphasized the need for continued monetary easing, stating that the bank's prepared to further ease policy if required. So, Japan being a huge liquidity supplier to the world, that is having a big impact on the action today. So, watch the U.S. dollar movement versus the JPY this morning. You can see the Japanese yen is down a fair amount, about 70 basis points this morning. And that's really what's pushing us around apparently. Earnings remain in focus. We had we had ExxonMobil today. Let's take a look here based on revenue. We had ExxonMobil. ExxonMobil missed. Was expected at $2 and a penny. Came in at $1.94. Chevron missed as well, was expected at $3.28, came in at $3.08. Centene came out. We had E&I, we had Procter and Gamble, which beat. We had AstraZeneca, which beat by 13%, and so on and so forth. After the close today, we don't have anything. Not seeing anything for after the market close. Usually that's the case on Fridays. French GDP is higher than expected. German GDP is lower. French and German inflation lower than expected. Canadian GDP in line. And then U.S. core PCE came in this morning at an index. It came in lower than expected. The PCE, which was really important, overall, the core PCE came in line at 0.2%. The spending, personal spending came in at 0.5 versus 0.4, and personal income came in at 0.3 versus 0.5. So the prior on core PCE for prices was 0.3%. So it came in line, slightly better than the prior. PCE price index overall came in at 0.2%. And so on and so on and so forth. So year on year came in at 4.1% versus 4.2%. And what we have left today is the Michigan Sentiment Final. This generally is not a number that is a mover. Generally, no surprises on the final number versus the prelim, which we had, I think, last week. And then we finished the day with Baker Hughes. That's what's on deck. Looking at the S&P, The S&P is in a multi-distribution rally currently, multi-distribution trend condition. 282,000 contracts traded today, which is pretty heavy for this product. Remember, the point of control or the volume mode, or the most common volume at this point, would be 260,000 contracts. We've exceeded that. The inventory is 94% long, so the inventory is quite long this morning. Look for a pullback on the open for the inventory to rebalance. And then the range is 40 points, which is excellent for today. The one thing you have to pay attention to is the fact that despite all this movement, we're still inside of yesterday's range. We've shifted the point of control down to 45.80 this morning. Here's what the S&P looks like. This is the profile chart of this most recent region. The rectangle here is what I talked about at Convergent Trading this morning in the chat room. This is the balance zone for this area. Essentially, this is where you see the box here. This is where the market is currently stabilizing, and it extends from 46.10 down to 45.65. 46.10 down to 45.65. We're trading at 45.9650 currently. The high of the session at 45.98. The point of control for this entire region is 45.84. 45.84, and that was our short target yesterday afternoon. As the market sold back into the range, the key target was 45.85 and 45.84. And then yesterday, having opened above the range, balanced above the range, once it started to extend lower, we ended up having this bearish engulfing day and closing at the low. So we had a pretty wide body candle, red candle yesterday that spanned the range of the last 6 or 7 sessions, 7 sessions really. It did extend much farther below expectations. It ended up pushing to 45.53.75. I really was expecting it to squeeze through the 85, 84, get down to 80, maybe the high 70s, and then stabilize in here, and it just rammed right through, right in the middle of the session. Didn't hear news or anything that would cause that, so that was a bit of a surprise. Okay, so that's what we have. We have a market that has popped higher, pulled back, inside day, started to one time frame higher, one time framed higher even more, and then had a higher high, lower low, and then again a higher high, lower low. So this is starting to kind of look like it is doing this. A bit of a megaphone type of formation here over the last 3 days. And today is expected to be a resting day. Again, today is expected to be a resting day. So we're expecting this market to have resistance right up against the single prints, where the single prints start up here at 46.09, expecting it to have support somewhere in the 85 to 82 area, and then everything stays in between. So 46.09, no real catalyst today, and 45.82. So we're expecting the market to fill in this single print range, and that'll be it for the session. Unfortunately, this is how it's shaping up currently. About 30 points of range. We have 40 points overnight. If it breaks through the 46.09, very clear point of control to take out at 15 or so, and then from there, it's the high of yesterday and the new high of the year. But most likely, we are going to see a choppy trade inside of this poor structure that we left behind in these single prints. That's what things look like for the S&P. For the NQ, the NQ looks a little bit different. It's weaker overall. It put in its high of the year way back here, as opposed to the S&P, which put it in yesterday. The S&P rate, the NQ range is 15,900 down into the 15,530 or so. We are currently trading at 15,740. The NQ also has quite a bit to repair right in here. So the high of the session so far at 762 to 65, that was the limit of these single prints, and then all the way through down into the 640 to 765 is the weak structure range. The NQ is in a different configuration than the S&P is, and its point of control is way down here where yesterday's settlement is. So the NQ is expected to try to push above the 65, looking for a fade of the 65 back in towards the open, and then for it to run to 640. And if it continues to run, then you're looking at 71 and 550 as targets below in the NQ. The NQ is relatively weaker than the S&P, and that's what I'm looking for today. If it breaks the 765, uses that as support and starts to push, then you have yesterday's point of control right in here, the 823 or so, and then yesterday's high becomes vulnerable. We'll see this morning. It'll probably take at least the first two brackets, meaning the first hour, for us to figure out what the true intention is. It is a Friday in the middle of summer, but still, I'm going to wait this one out today. I'm not going to try to push or squeeze in early. I'm just going to let it decide. Let the market overall decide what it wants to do, and that's how things shape up. If we take out yesterday's high, we could have a runner in the NQ up to the next point of control here at the 975 or so, 978, 978, but it's very unlikely today. Okay, that's the Nasdaq. Looking at crude oil. Crude has pushed into the 80 and is, it pushed farther into the 80s than I expected. Crude put in a relatively weak low yesterday before pulling back, and it's trading right in value of yesterday. Crude is expected to try to push above the 825 up here, 824, 8024, 25. Test that. I'm expecting that it's likely to push up there, fail, come back to 79.82, and then squeeze across, which it has done. So if you look at the crude overnight range, 80.21 to 79.50, this is basically the value area of yesterday. And I'm expecting crude to kind of trade that range and stick around here and use the 80 as a point of control for today. Came close to it yesterday, but overall crude is likely to have a rest day. I hope that sets you up for checking your own plans for today and to be prepared to do something or to act only when the market breaches those edges that we just talked about. I suggest you watch the video again if you need those levels, because I need to move on here and get started. A reminder that Monday is the last day for the convergence sale for 20%. It's the summer sale. We do this every summer for a quarterly membership. Monday's the last day. At the end of the day is the last day for that sale. So if you want to participate, point your browser to go to ct.pro/summer20. Good luck.